Understanding taxes. When selling your house in Ohio, a comprehensive guide, We Buy Houses in Ohio. Selling your house can be an exciting endeavor, but have you considered the tax implications that come along with it? Understanding taxes when selling your house is crucial to avoid any surprises when it comes time to settle your tax bill. Whether you're a seasoned seller or a first-time homeowner, grasping the basics of how taxes can impact your home sale is essential. The Internal Revenue Service, IRS, has specific rules and regulations regarding taxes on real estate transactions. The amount of tax you owe will depend on various factors such as the purchase price, fair market value, and your income. The cost basis and selling price play a significant role in determining your tax obligations. Many sellers find themselves perplexed by the complexities of these tax laws. That's where a knowledgeable real estate agent can help. They can guide you through the process, ensuring you understand how different rates and percentages may affect your bottom line. We'll explore why it's important to be aware of tax implications and offer insights into key factors that determine your tax obligations. So let's cut to the chase and uncover what you need to know about taxes when selling your house. How capital gains taxes apply to selling a home. Selling your house can be an exciting and profitable endeavor. However, it's important to understand the implications of capital gains taxes. What are capital gains taxes? Capital gains taxes refer to the taxes imposed on the profits you make from selling an asset, such as real estate or stocks. When you sell your house for more than its original purchase price, adjusted basis, you may have a taxable gain that is subject to taxation. This profit is known as a capital gain. Types of capital gains and tax rates. There are two types of capital gains, short-term and long-term. Short-term capital gains occur when you sell a property that you have owned for 1 year or less. On the other hand, long-term capital gains apply to properties held for more than 1 year. The tax rates for short-term capital gains are typically higher than those for long-term gains. Short-term capital gains are taxed at ordinary income tax rates, which can range from 10% to 37%. Long-term capital gains have separate tax brackets with lower rates ranging from 0% to 20%, depending on your taxable income. Ownership duration and lower tax rates. To qualify for the lower long-term capital gains tax rates, you must meet certain ownership duration requirements. Typically, you need to hold on to your property for at least 1 year before selling it. If you sell before this period elapses, any profit will be considered a short-term gain and taxed accordingly. However, there is good news if you're planning on selling after owning your property for at least 1 year. The longer you hold on to your property, the more potential tax savings you can achieve by taking advantage of the lower long-term capital gains tax rates. Exemptions and deductions. While capital gains taxes may seem daunting, there are exemptions and deductions available that can help reduce your tax liability. One notable exemption is the primary residence exclusion, which allows homeowners to exclude a certain amount of profit from the sale of their primary residence from being taxed. Tax implications of homeownership and house sales. Owning a home comes with various tax implications that every homeowner should understand. From the tax benefits associated with homeownership to the potential consequences of renting out part of your home or using it for business purposes, these factors can significantly impact your tax liability. Changes in ownership status, such as divorce or inheritance, can also have implications on your taxes. Exploring tax benefits associated with home ownership. One of the significant advantages of owning a home is the various tax benefits it offers. These benefits can help reduce your overall tax burden and increase your savings. Some key tax benefits include deductions for mortgage interest. Homeowners can deduct the interest paid on their mortgage loans from their taxable income. Property tax deductions. The property taxes you pay each year are generally deductible on your federal income taxes. Capital gains exclusion. If you've lived in your home for at least 2 years and meet certain criteria, you may be eligible to exclude up to $250,000 or $500,000 for married couples in capital gains from the sale of your primary residence. Understanding how these benefits work and taking advantage of them can significantly impact your financial situation when it comes time to sell your house. Impact on eligibility for deductions and credits. Home ownership also affects eligibility for certain deductions and credits beyond those directly related to owning a home. For example, mortgage interest deduction. This deduction allows homeowners to deduct interest paid on mortgages used to acquire or improve their homes. Home office deduction. If you use part of your home exclusively for business purposes, you may qualify for a deduction based on the square footage used. Energy-efficient upgrades. Installing energy-efficient improvements such as solar panels or energy-efficient windows may make you eligible for tax credits. Understanding how home ownership affects your eligibility for these deductions and credits can help you maximize your tax savings. Tax consequences of renting out or using your home for business. If you've rented out part of your home or used it for business purposes, there are specific tax consequences to consider. These include rental income. If you've rented out a portion of your home, the rental income is generally considered taxable. Reporting home sale proceeds and tax requirements. When selling your house, it is crucial to understand the tax implications and reporting requirements associated with the proceeds from the sale. Failing to comply with these obligations can result in penalties and unnecessary headaches. To ensure a smooth process, follow these guidelines. Forms for reporting home sale proceeds. To report the proceeds from selling your house, you need to be aware of the specific forms required by the Internal Revenue Service, IRS. The most common form used for this purpose is Form 1040, which is your individual income tax return. However, depending on your situation, you may also need to complete additional forms, such as Form 1099-S. This form is provided by the title company or closing agent involved in the transaction. It reports the gross proceeds from the sale of your home. Schedule D. Use this form to report capital gains or losses resulting from the sale of your property. Filing deadlines. Understanding filing deadlines is essential. The deadline for filing your tax return generally falls on April 15th of each year, unless that date falls on a weekend or holiday, in which case it is pushed back to the next business day. It's important to note that if you are married and file a joint tax return, both spouses must meet certain use requirements regarding primary residence ownership and occupancy to qualify for certain exclusions or deductions related to home sales. Additional documentation requirements. In addition to completing the necessary forms, there may be additional documentation required when reporting real estate transactions for tax purposes. These documents help establish important details about your property sale and include closing statement. This document provides an itemized breakdown of all costs associated with buying or selling your home. Proof of purchase price. You will need evidence of what you originally paid for your property. Receipts for improvements. If you made any qualifying improvements to your home, keep receipts as they may help reduce your taxable gain. The subject of real estate taxes is rarely people's favorite, but it is critical that you understand it. If you would like to find out what your options are or would like to see the rest of the article, please check it out here. Understanding taxes. When selling your house in Ohio, a comprehensive guide. We buy houses in Ohio.